We're talking mining and the gold landscape with Rick Rule, Chairman of Sprott U.S. Holdings. He joins me here at the PDAC in Toronto. Rick, good to have you back on the program.
It's always a pleasure. Thank you for having me.
So let's start by looking at the mining space here. But first I want to ask you about the Huey, up about 55% since the start of the year. I couldn't wait to ask you this, Rick, because what does that signal to you?
Well, you'll recall we were a little earlier. I was telling you the last time we were interviewed last year that it was ready to run, but I guess a year earlier is better than a year late.
Right.
I think certainly the run in gold and the run in the gold stocks was overdue. We've talked before for reasons why the gold should have done well. The gold stocks were simply, even at the gold price that existed at the beginning of the year, oversold. You'll think about the junior gold miners down 90% in 5 years. It was a market that could double and still be down by 80%. It was an astonishingly oversold market.
And I remember you were saying, look, at these prices you should get in now. That was like 2-3 years ago. So what do you do at the current price level? Is it too late to get into the game now?
I think it depends on who you are and what you are. We need to understand right now that the generalist investors, the institutional investors, have to be in the gold space because it's the only sector that's working. And if they're closet indexers and they're underweight gold, they have to come in. That goes to big names like Newmont and Barrick. If you're investing in the smaller end of the market, the typical sort of Kitco subscriber, you need to understand that some of these juniors, if they've doubled, it's probably prudent to sell half, take some money off the table, and get a free ride on the rest. So the question that you're asking me really depends on who you are as an investor and what part of the market that you're interested in.
Rick, let me ask you, look, in this current gold environment, it's not unusual to see like a $60 move in gold. How do we know this rally is sustainable? We've had rallies in the past. Why is this one different?
Well, I don't think in the near term this rally is sustainable. My suspicion is that gold will pull back before it goes forward. What's going to be really interesting, I think, is that gold investors are so used to disappointment that if this rally falters a little bit, there are going to be people who say it's over and sell it off and miss the real move, which I believe is to come.
To come when?
Can't help you with that.
All right. So a big move, do you have like some sort of price range you're looking at?
Gold moves in my career play out over 5 or 6 years. You'll recall in the last decade, we had a run that began in 2002 and really ended in, depending on how you count, 2011. It was an 8 or 9 year run. The run we had the decade before was a 4-year run. The run we had in the 1970s, again, depending on how you view it, either began in 1970 and ended in 1975, or began in 1970 and went all the way to 1981. So these things are generally very deeply rooted and very long running. Now, it's important to know that you can have ugly cyclical declines in a secular bull market. The cyclical decline that we experienced in 1975 was a 50% decline in a secular bull market. Those people who got shaken out in that cyclical decline missed an 8-fold move in 5 years. So it's important, if you have the liquidity and the courage, to stay this trade.
Rick, let me ask you about the streamers. We saw how they outperformed the majors over the course of this 4.5-year bear market. Now that it seems we're kind of coming out of the bear market, do you think they will now underperform the majors?
I do, but I own them anyway because they're better companies. The truth is that in a rising gold price environment, the most marginal producer does the best. An increase in the gold price increases margins, and the people with the smallest margins get the best proportional increase. The streamers, by contrast, have the best margins, so they're the least leveraged. But with me personally, I'm old enough and rich enough. If you take away some of my downside, you can have a little bit of my upside. And with the streamers, they're such superior businesses. They're so well run compared to the rest of the mining industry that even though in a rising gold market, the worst companies will outperform, you're better to have a smattering of the best companies too.
I can always count on you to be straightforward. Rick, well, thanks so much for stopping by. Thanks for joining us.
Always a pleasure. Thanks for the opportunity.
And thanks for watching. We'll have more for you from the PDAC, the world's largest mining conference taking place here in Toronto, Canada.